What's up guys, welcome back to the channel. This is still me, Solomon of Wisdom, aka Born to Trade, and in today's lesson we're still talking about ICT and smart money concepts. What I basically do on this channel is I talk about these concepts and how you can actually improve and make money from the financial markets. So not only just improving but staying financially consistent, identifying our mistakes and finding a solution on how we can actually improve on that. So if this concept is what you're interested in, kindly subscribe to the channel if you are new to this channel. And we equally have a free Telegram community where I share trading ideas. You can look to join us on that community. The link is in the description. So let's jump straight into this. This is actually GBP USD. Last week we did some price analysis on GBP USD, and I think last 2 weeks we actually looked at Euro USD. So we're still going to reflect on that and see how we can actually improve on analysis and how we trade with these concepts. So this is GBP USD once more, and this is the 30-minute time frame. Now, if you remember last week, this was what we talked about. We said that we had a mitigation right here. We had this mitigation. Now price returns to this particular area, this area that was looking like a resistance level, where price reacts from this level, push to the downside. Now a spike above that high, a push to the downside once more. You see that now price returns back to this area, reaction, comes back, a reaction, and at that point I think price was currently at this area, and just like I said, this was a resistance level and price was likely going to take the high, and when price takes the high, we were going to look to trade from, I think, a zone from this particular area. Okay, this was our expectation, right? I said price was actually going to come back, maybe to react from this particular area. And if you could remember, I had this particular zone which I said we are likely going to be expecting a price reaction from there after we had the ICT power of 3 playing out at this particular area. Now during the week, what we actually see in the market is price push to the upside. After it takes this liquidity at this particular high, then price prints this high, prints the low, now prints another high, a low. I think price prints another high before we had a shift right here. Okay, so if I try to mark that, what you're going to see is we have price taking this particular high. After it sweeps this high, we have price print this low because price didn't actually close above the high, so I didn't actually consider that as a break of structure, but a lot of ICT students is going to see that as a break of structure. Okay, now I see price come back once more, sweeps this high that is taking the buy side liquidity. I think I should label that. Then price takes this buy side liquidity, and what we see is a reaction to the downside which sweeps this low right here. So a lot of people is going to consider this as a market structure shift, right? Now this could be considered as a market structure shift, which signifies that we're going to have a possible shift in structure. Now a lot of ICT students, just like I always say, they're going to look to trade from this order block. That's if they're considering this week as a break and a shift, right? They're going to trade from this order block. You see this is more like a range created supply zone. Now price comes back, mitigates, you see after the sweep, which could be considered as a shift in structure, then it returns back, mitigates the zone, and we have a push to the downside. And remember, our expectation is that we're going to trade from this zone. By this point, price didn't actually get to the zone. Instead, what you see price doing right here is price forms this equal low right here, and this equal low can actually be considered as a sell side liquidity, so should be labeled to sell side liquidity. So these are sell side liquidity, and what we see is after price formed this equal low, price pulled back a little, and after the pullback, what we see is price comes back to clear this sell side liquidity, that is taking away those stop losses at this particular low, right? Then after that, what do we see? We had a little pullback with wicks, just like I've been explaining. If you consider pullbacks with wicks right here, this is a liquidity sweep right here, price sweeps this low right here, it push the upside. Then if you considered this high as a valid high that swept this low, this is where you're going to consider as your market structure shift. Okay, this is where you're going to consider as your market structure shift, and this other block right here is where you're going to look to take your trade. And you can see this was a perfect one when price swept this liquidity. After it takes this liquidity, we have another push to the downside which sweeps another low. Now here is a shift in structure where a lot of people is going to look to enter and trade to the upside. That is those who trade pure ICT concept. But me who trades more like smart money strategy, you know, even this price action right here, I wasn't going to consider that because I usually wait for price to close above highs and lows. Okay, this price action I might not look to take this trade because firstly I'm going to expect price to close above this high to consider it as a valid break, right? Then price is actually going to close below this low before I consider it as a market structure shift before I look to get my entry right here. So this price action right here wasn't for me, but looking at this area, ICT students already have an entry and its reaction to the upside. But if I'm to look at this particular area, what I'm going to consider, this actually my high, and this high printed this low, right? This low that formed the equal lows we have right here. Then what I see is a pullback, and after the pullback, price comes back. I'm going to consider this as one leg of price where price comes back to sweep this particular liquidity. So I'm going to consider this as the highest point that printed this low. Now before I'm going to consider a market structure shift, this is where I'm going to see as my shift in structure, right? This I'm going to see price shifting in structure. Okay, let me actually label that. This is going to be my market structure shift. And where is the zone I'm going to look to trade from? You know, we have this range created demand zone. You see, I'm going to select the whole of this range as my zone. Then selecting this, I can actually decide to refine maybe to this particular candle we have right here. You see that wick right there. I could actually look to refine to that, and you see we actually have our own confirmation, that is a shift, and a retest, that is mitigation of this zone before we see a push to the upside. Okay, so this is actually what we have in this area. We had that shift right there, then a break of structure, that is price taking this buy side liquidity. Then what you actually going to notice is price has actually failed to return to this particular zone, but this zone is still a very valid zone because you still have some price inefficiency, and at some point price will actually come back to rebalance the inefficiency we have at this particular area. Now what you can actually see is price retrace to the upside. Then if you try to zoom out a little, you're going to note, you see I have a very good zone right here. I have a very good zone which I was actually looking to trade from, and if you try to mark this zone correctly without zone refinement, this is what our zone is going to look like. Okay, if you try to include the whole zone, that is, you know, we have a liquidity sweep pattern right here. Price takes this high, then a retracement to the downside. So this is the actual zone here, and if I try to extend, what you're going to see is price comes to mitigate this zone and a little reaction to the downside. Now I actually refined my zone because I like to get out of the market quickly once price mitigates my zone. Now at this point price failed to get to the refined zone, that is more like this hidden zone. Then at this point we see we had a reaction to the downside after price takes this buy side liquidity, and if you try to look closely, what you're going to see is we have this liquidity area here. This is a liquidity area. This is something we love to see when I look at the price chart. I like to identify liquidity areas because if you try to identify your liquidity areas, things will look a little bit easier for you because you will likely avoid areas that might actually take you out of the market. Now we have some inefficiencies right here, and if you look closely, we have this zone right here. This is a very good area if you're looking to trade. Then what you see is after price prints this high, we had a pullback where price starts to consolidate a little, here being our liquidity area. Then after price builds that liquidity, or you can actually call an inducement area, now I see price sweeps that, mitigates this nice zone, and we're seeing this reaction to the upside, a pullback, and price finally takes this external range liquidity. Okay, that is taking the buy side liquidity, and you can actually look to label that as a buy side liquidity. But what you can actually see is that the most zone, that is the main zone I was actually having interest in trading from, because the truth is that I wasn't even taking these trades. I didn't take these trades, that's the truth. I had two areas of interest. Firstly, this one we had right here, and secondly we had another one right here. I think I had another zone which is still up here. I have another zone which is still up here, which price is yet to mitigate. Now this particular zone I had interest in, it failed to hold price, and I lost money on this setup. Now if I try to extend, you see, failed setup. Now what we actually have right here is price sweeps the high of the zone, taking the liquidity at that area. Now we have a pullback into this range. Now if you try to look at trading range, you're gonna see that these are current trading range. This is the low that printed this high, so this is our range. And what could possibly happen from this particular area? We have two things I might be looking at, or I might see price do from this area. Firstly, price might actually react from this area and continue to the upside to take this external range liquidity. And secondly, what could actually happen after tomorrow being Friday is price might actually come back to this area. Price might just come, takes this low, that is sweeping the liquidity at this low, before we start seeing a reaction to the upside. And if that fails to happen, another thing that could possibly occur in the market is price might actually come deeper to take this liquidity here. It might come to this particular area just to sweep the liquidities, might come deeper and react to the upside. And coming deeper in this case might actually cause price to come to rebalance this inefficiency we have right here, or possibly mitigate this zone where we're going to see price comes very deep, maybe mitigate this zone and a continuation to the upside. So these are things, scenarios that might actually occur in the market. And remember, we have this higher time frame zone at this particular area. Is another place I might be looking to take trades from. Okay, so this is actually a good price action we had last week. And if you're someone who scalps, if you scalp at these areas, you might actually get involved and make money from the market. Okay, now we actually looked at Euro USD, so let's see that. We looked at Euro USD, that is last 2 weeks, and this is actually the price action we had there. Remember, I said I was going to trade from this particular area. We had this zone when I was explaining the price action. I said this is going to be a very good zone to trade from. So since the market is not too perfect, there are a lot of manipulations going on in the market. So I already took this trade. I got involved at this particular area. I actually set a pending order in this case. I got involved right here. We had an unemployment claim. This is actually a high impact news event. Then price reacted from this zone. I got out when I got my 1:4. I exit the market. I'm just here to make money and leave the market. So I got my 1:4 and I'm out. I'm not looking to catch the whole moves. Okay, I'm not looking to catch the whole moves in the market, and I'm out. So this particular one was actually shared to those in my private trading community. We had this particular zone right here. That was last week, and we're looking to trade from this zone to the downside. And this was actually a nice setup. And the truth is, a lot of people actually caught this trade, but personally I missed this trade. I wasn't able to get involved because I had a refined zone. I was looking to trade from this refined zone, then price missed, so I didn't actually get involved. But I think when we were discussing on Euro USD, that is 2 weeks ago, when I was breaking the price chart down, I said this is where I had interest in this particular zone. And you see, we already made money from this and we out. So the money I lost on GU was actually recovered right here. And this particular week personally was a very good week because we won a couple of trades and we made few profits compared to the other weeks. So this is a very nice one. I hope this lesson was actually helpful. If this lesson was helpful, consider subscribing to the channel and consider joining our Telegram community. The link is in the description. Thanks very much for watching this one. I'm still Solomon Wisdom, and see you in the next one.